All right, good afternoon and welcome to today's Daily Maverick webinar sponsored by Brenthurst Wealth Management. My name is Ruan Jooste. I'm an associate editor at Business Maverick, and my two esteemed guests need no introduction, but I'll do so anyway. First, we have Magnus Heystek. He's an investment strategist and a director at Brenthurst Wealth Management, and Dr. Ralph Mathekga. He's a former policymaker at National Treasury and now an independent economic and political analyst. Welcome, gentlemen.
Yes, good afternoon. Thank you very much.
So today we will be discussing the reasons, the risks, the rewards, the returns, and all those things that have increased the interest in offshore investment, especially in today's turbulent and uncertain times. Magnus, maybe you could just start off and say a few words on why offshore investment is such a pertinent topic in the investment world.
Well, all over the world it's very pertinent. People all over the world invest in other countries. I mean, if you think about it, going back in our history, our economic success to a great part was dependent on foreigners investing here, in Kimberley in the diamond mines, and later in the gold mines, and later in our factories, etc., etc. So global investing is a global phenomenon, if I can call it that way. But remember, South Africans for many, many years were excluded from investing offshore due to exchange controls, and only in the late 20th century did we start investing offshore. 1997, small amounts, and that only gathered pace really in the last 10 years or so, partly driven by two factors. First of all, South Africa has been a great place for many investors over many years. Many research documents have shown that you had made enough money in the SA market not to worry about investing offshore. That started changing in around about 2010, 2011, when, first of all, the commodity cycle started downturning very, very dramatically. And in 2011, 2012, 2013, the rand started dropping seriously, which was driven by the economic policies of the ANC. It was a flight of capital from South Africa, which still continues today. And with the result that the JSE has lost a lot of its attraction to both foreign and local investors. And the returns over the last 10 years show that to build your wealth, you should have increasingly added to your offshore portfolio. But that comes with a sort of natural inclination that you're skeptical about offshore investing, and you hear about all kinds of scams. And people often say, offshore investing is risky, etc. Whereas, in fact, it's just the opposite. South Africa is actually the risky country. The rest of the world is the stable country: Europe, Japan, United States, Britain, etc. And so there's been this debate in the South African investment community over the last 7 to 10 years as to should you go offshore, how much should you go offshore? And it's turned sometimes into a non-financial debate. It becomes very emotional. And people say, yeah, but you're unpatriotic, and why are you advising people to take money offshore? Well, I politely point out to people that you are a global citizen. You spend money globally. That cell phone that you've just bought from Apple is a wholly imported product. So where does your loyalty lie? So it's a bit of an emotional debate in parts, but the bottom line is, to summarize, had you not taken your money offshore or part of your money offshore, your returns in the South African market over the last 10 years and in the last 5 years in particular have been extremely, extremely poor. In fact, over the last 5 years, in your SA pension funds, retirement annuity funds, provident funds, you've made very, very little money. Nominal terms, and in real terms, you've probably lost 2 or 3% per year. So suddenly people have woken up to the fact that the assets have depreciated dramatically relative to other assets in the world, and hence this discussion today: how much offshore, where offshore, what kind of instruments to consider, and the like.
Magnus, maybe it's just important to mention that offshore investing is part of a diversified investment strategy and only a part of your investment your portfolio. Maybe you can just explain the role it plays in the bigger scheme of things.
Yes, of course. It's always been, and pension funds and the big institutions have been allowed small portions of their investments to be going offshore. It's currently sitting at 30% into the developed markets. And and you're quite right. It's part of a global diversified portfolio. The answer is, or the question is, how much offshore and what percentage? And the answer to that depends on many factors. In some cases, it is zero, and in some cases, it's 100%. Now, why do I say that? Because if you are entirely dependent on an amount of money to give you an income, and you've got no option but to invest here in South Africa, where the rates of returns have been quite good as far as income is concerned, you can't consider offshore. You need your capital here to provide you with an income. As opposed to somebody who's perhaps a global citizen, travels the world, has children in Australia and in Canada or in the US, there's an argument to be made that that person should have 100% of his or her capital invested globally and perhaps just have a residence in South Africa. So you've got those two extremes, and it's quite difficult sometimes to find the exact spot between those two poles, what percentage should be offshore.
Ralph, Magnus did mention that offshore investing is a very emotional topic. You know, people are so scared that South Africa is going to become the next Zimbabwe. Should we take our cash and run? What is the situation regarding local investment, the safety of our capital, even the rumors of prescribed assets?
Well, I think that to start with, the whole idea of economic patriotism is just a strange idea. I mean, I've read politics and economics throughout, so I don't think that people can just invest their money just because it makes emotional sense. You should put your money where you know that there is security when it comes to returns. And I think that South Africans are also thinking along those lines. And of course, I mean, the topic always takes an emotional turn where it comes out as if it is only the rich white who just want to repatriate their money. And I think it's about people who have money and people who understand their money. And I don't think it has to do with anything of color. It's just that it so happens that it takes the nuances of South Africa's politics, of course, where emotionally it becomes the question of color and so forth. So I think that when the instruments are available to people, when people access instruments through which they can invest some of their money offshore, where they'll be guaranteed certain returns, people are going to do it, and it will have nothing to do with the emotions. People will be looking at the fundamentals of South Africa's economy, which I think quite a number of people are beginning to be quite concerned about. I mean, you're talking about the prescribed assets. What is the mood about that? I mean, the reality is that, can you really trust government now, having the legitimacy crisis that it has, to extend itself into the pensions and direct those pensions in the direction that it think policy priorities are pointing? It's a crisis. I mean, if you are a public servant, are you also going to risk your assets? Are you going to allow for your pensions to be able to be taken in that route? And I think that is that element of the debate that I've not seen coming out about, just from your own pocket as an individual, because you love the country so much and you're very patriotic. Are you going to allow that your monthly savings are being used by government at this point in time to extend its hand after so many years where it has actually failed to show that it can manage public resources properly? So I don't think the public mood is in support of that. I'm surprised, actually, to hear that Treasury seems to be supporting this idea, because, I mean, Treasury, in my view, my understanding is that they will be a little bit more conservative about crossing that line and going into that and touching on those pensions. Even the unions themselves, I really doubt if they fully comprehend the implications of this, because it is quite I think it requires much longer debate. It's not something that you can react through to an emergency with prescribed assets, taking those pensions and so forth. It changes the fundamentals in South Africa to a point where we need a bit of a longer debate on this. I know time does not allow for some, but I don't think the public mood is in favor of this thing.
Ray Malaka, one of my colleagues, mentions Regulation 28, which has also been a hot topic. The unions have been pushing for it to change. The ANC has had a policy document released that they want to change to force pensioners and investors to invest more in local infrastructure. Magnus, he asked whether Regulation 28 should be a change to allow for a greater portions of assets to be allowed to invest offshore. And before you answer that, maybe you could just say what are the restrictions of Regulation 28 in terms of offshore investment?
Well, Regulations 28 of the Pensions Act prescribes to pension fund managers and asset managers, and hence individuals, how much of their money can be invested in various asset classes, i.e. equities. I think it's 75% maximum. Offshore is maximum 30%. And then bonds, I think it's 30%. And then property, 10%. So there's a ratio that is prescribed by Treasury directed to the pension funds. And they're actually telling them, you've got to follow these broad guidelines. Now, there's a bigger debate about Reg 28, not only about increasing the offshore allocation or not, because for the last 10 years, that restriction on offshore investing has cost everybody in South Africa a great deal of money in terms of lower returns. Our stock market has not fully participated in the global economic boom that has been happening all around the world, and especially in the United States. So Reg 28 has made all South Africans today substantially poorer. A lot of people don't understand that because it's a nebulous number. How much am I poorer? So you don't know. But if you look at the returns of all these instruments that I was referring to earlier, they are horrendous. They 1 to 2%. My inbox is filled with people saying, I have paid in money for 10 years into these things. I have less money today in my RA than I had 10 years ago. And that's a direct consequence of the restriction, number one, and secondly, some of the high fees that the asset managers can charge on these products. It also restricts, strangely enough, the types of assets that you can input into the fund, like gold, for instance. Gold via Kruger Rands has been a fantastic investment for 20 years and more, growing at 15% per annum. But for some reason, Treasury has disallowed the inclusion of gold coins into your retirement fund. Well, that's been a fantastic investment. So it's not only just the foreign exchange issue that needs to be considered. I think you need a whole relook at Reg 28 and try and get it to the standard of Australia, where they've got their superannuation, where you as an investor can decide where you want to invest your money and in what ratio. And if you want to go 100% gold, that's your decision. So at the end of my commentary on this part, Reg 28 via the Treasury, via government, is extremely paternalistic, telling individual investors that you're stupid, you cannot handle your own money, we will tell you how to do it. Well, for the last 10 years, that's been a dreadful decision by Treasury, because we've all lost out, including the PIC and the government. And secondly, investors are now paying the price. They haven't had growth in their pensions fund. You know, the pensions industry returns at the moment is between 1 and 5%, which means that in real terms, you've made no money. And that's quite a statement to make, but there's no media coverage on this. So most people's pension funds have actually lost a substantial portion over the last 5 years, but you don't hear any commentary about it. So it's not only offshore. So to end up, people should be allowed to invest more money offshore, to participate in the growth that's happening in the rest of the world, and not be forced to invest in a stock market that has been doing very, very poorly for 10 years, and the outlook also does not look great. And if we don't wake up to this, we are all going to end up substantially poorer than we think we are.
Well, the questions are rolling in from over 1,000 viewers. Ralph, Let's talk a bit about Regulation 28 and the restrictions imposed on investors in collective schemes or pension funds, but also exchange controls. Are these kind of capital restrictions an archaic or old-fashioned way of policymakers to keep money in the country, but also at the cost of the economy and its citizens?
I mean, I think that this just reflect the core of policy contest in South Africa. There are those that believe that you should come up with reforms in the state. Those who will even say that make it even relax labor laws, and including also the movement of capital. I mean, you go to any basic business school, they will tell you that the movement of capital will influence how people can invest in the economy. If you invest in the economy, that it will be very easy to get, very difficult to get your money out. You will be investing, your risk will be determined also by how quickly it is you can get your money out. The quicker it is you can get it out, the easier. You don't have to worry about that. So all these regulations, I think they are at the center of the policy contest within the ANC. We know, and I think that the tragedy of the COVID-19, as far as I understand, in my studies of economic history, is that the response is going to be more of an inward-looking economy, if you like, more of a centralized approach to governance, inward-looking economy, more of a command-style type of economy that just goes the opposite of regulations that people have been talking about as one or among some of the impediments to growth or in South Africa's economy. So the political circumstances, as we see it now, unfortunately, it is not in favor of deregulation of the economy, unfortunately. It does not point to that. The misunderstanding or the misdiagnosis of the COVID-19 pandemic, which we are going to see, I think, to a great extent within us and even across different states, you are going to see the state extending its hand more. And you are looking at most of the states that seek to model themselves along China. They haven't even a tiny capacity of what China has, forgetting that controversial as it is, China, not being a democracy as it is, China, it does not have a problem of state capacity. They can manage corruption. So you're going to see more regulations. You're going to see government that want to extend their hand, but unfortunately, corruption weighs on their capacity to deliver. And at the end of the day, it just results in the system facing more and more risk. I do not think that things as they are configured now are going to favor more of an outward-looking economy where you remove those regulations on the movement of capital to encourage foreign direct investment. I see much more of an inward-looking economy. And it's not only going to be South Africa that is going to do this, unfortunately.
Well, that we are stuck between a rock and a hard place. The rules are what the rules. We are in a current crisis. The markets are flat. Magnus, some of our viewers are asking the question, what are the best options of diversifying their portfolios offshore? People are mentioning gold. People are mentioning exchange-traded funds. What are some of the options for individual investors to take advantage of some of the opportunities or the few opportunities that are available to them?
Ruan, there's actually quite a lot of things you can do, and you need to, first of all, sit with a skilled advisor who can show you the ropes, how you can do it, and importantly, an advisor who is independent and not beholden to one of the large asset management companies, because they have a vested interest not to take money offshore or to change your portfolio. And that's what we've been experiencing the last couple of years. I've been writing about Reg 28 for now 6-7 years. I've been writing about taking more money offshore for the same period of time. And, I've just been attacked and slammed and called all kinds of names. Nevertheless, what you could do as an individual, you could sit and look at your existing investment portfolio, whether it's a small one, whether it's a big one, it doesn't make a difference. You can have a look at your asset allocation within the funds or your products that you have, and you can make changes there quite easily and cheaply without incurring any costs. For example, people over the age of 55 who have money in retirement annuities, preservation funds, provident funds, etc., can and they should consider taking out and maturing their RAs earlier. Take the 1/3 out that you can, because there's a tax-free portion which hasn't been increased for a long time. So the principle is the sooner you take it, the better. And with the balance of your capital, the 2/3, you can move it into a living annuity and go 100% offshore if you choose to do so. I've done it with my own money, and I talk about it and I tweet about it. And my returns last year were 37%, whereas the market gave us 1% in South Africa. So that's one thing that they can do. If you're lucky enough or unlucky enough to be older than 55, you can make strategic changes to your investment allocation. If you're younger than 55, you can look at your investment portfolio, whether it's unit trusts or endowments or what, and instruct your advisor and or yourself, you can do it, and move funds within your existing portfolio, either once off or gradually, not to pay too much capital gains tax. But there are many ways to change your asset allocation. Get your money into asset allocation funds. And then thirdly, if you've got some spare cash, new money, don't put new money into badly performing funds. Put them into asset swap funds, which have been growing at 15 to 20%. Or alternatively, if you have a large enough money, which we're talking about 300,000 to 400,000 Rand, you can remit that using your individual investment allowance. You're allowed 1 million Rand without questions, without too many papers that you need to fill in. You can take that abroad and invest it in ETFs, gold coins, global healthcare funds, biotechnology funds that I've been punting for years and years and years. And you just need to take that step to understand that South Africa is going through a very, very tough time. And if Dr. Mathekga has anything correctly with what's going to happen with government approaches, even more so, that you need to externalize some of your assets to participate in what is happening in the rest of the world. I'll give you an example. I mean, if you invested $100 into Netflix 10 years ago, we all know what Netflix is because we sit and watch it for 6 hours at a time. Netflix, $100 10 years ago will be worth $6,000 today. Tesla, same thing. Our local boykie from Pretoria has made a fortune for him and his investors. So we're missing out on opportunities. It's sometimes not only just a political thing, it's the opportunities that you have offshore. Technology funds have been growing for the last 10 years at 15% per annum in dollar terms. We don't have a technology sector in South Africa. We don't have it. We don't have a biotechnology sector. It's like foreigners who wanted to invest in gold 100 years ago. You could not find a gold mine in the United Kingdom. You had to invest in South African gold mines. The tables have turned. The gold mines of today are happening in Silicon Valley, in outside of San Francisco and those places. If we want to participate in that, we've got to move money into those funds and invest it there. And as Ralph said, it's got nothing to do with emotion and loyalty and patriotism and stuff like that. You and I and everybody else, we are global citizens. We spend globally. Our shopping basket is filled with French cheeses and German wines, and we go on holidays to Mauritius, and we have cell phones and computers. Those things are all priced in dollars. And that Bentley that Ralph has ordered is priced in dollars. It's not priced in rands.
Ralph, Magnus mentioned capital gains tax. Let's talk about taxes on capital formation. The South African tax policy is not very pro-investment or saving. We've got dividend tax. We've got capital gains tax. There's now talks of wealth taxes. What is your opinion about tax policy not being pro-investment or wealth creation? And what do you foresee what's going to happen in the near future as government has to raise 60 billion Rand in taxes somewhere?
I think that already there are some who are saying that our when it comes to extracting revenue, we are getting to that point where we just cannot get more. We're getting to that line where you are just going to hurt the economy. And I think that when we talk about the wealth tax, those are policy issues. For me, those are not technical intervention that one can say are aimed at the economy. For me, those are policy issues. Why would you be targeting the wealth tax? It is also to try to redistribute, and redistribution policy is not always a policy that is aimed at economic intervention, or a policy that one can say it is trying to yield to maybe some of the immediate economic priorities. So the question of the wealth tax, the way in which I look at it in South Africa, and also the way in which the debate it is being dealt with, it's never really justified in the sense of the economy, usually justified from you can say historical sense. And I think that as far as the progressive income tax is concerned, also how far can you squeeze into the middle class? I mean, this is a highly indebted middle class, we all know. And you're correctly saying that the tax regime does not really favor much of the savings. The middle class, what we do, including myself, we participate in the consumption economy. There isn't very much when it comes to the savings, but the tax burden keeps growing. And this is, I think, an increasingly angry group in South Africa, where they are actually not coping. That missing middle, they are not coping. They don't qualify for social security, but they are already living on debt. They have been experiencing salary cuts for quite a while, in real terms. So I think that you are going to end up with a group of very angry people who are disenchanted with the politics of the country. I mean, you cannot build a country if the middle class are not, because if they are not functional. It is the glue that actually pulls the majority of the poor and I would say the rich together, because without the middle class, as some of the philosophers have said, the poor are just going to stone the rich. You cannot live in a society that does not have the middle class. You've got to grow the middle class. But this is where the tax, I think it is highly concentrated at this point. And South Africa's economy is quite demanding on this group. And sadly, on the middle class, there's no political party in South Africa that can say to me that they speak for the middle class. And I'm not saying there is anything wrong with a party that speaks for majority of the poor. Yes, we should have political party that speaks for majority of the poor. Majority of our people are, of course, falling within that category. But the reality is that there is no political party that will go to the election speaking about tax. Tax is a taboo. It's like we all morally obliged. We cannot ask the question about it. It's above our politics. And I think that is wrong. We should begin to interrogate further the implications of this tax regime. And I think the middle class are going to begin to ask these types of questions.
Magnus, let's talk about tax as a point in making your investment decisions. It's quite important, it's becoming important to have a tax-efficient investment portfolio. How does it apply to offshore investments?
Well, in many respects, you pay tax whether you have invested in South Africa or offshore. It doesn't make a difference. There are slight advantages by investing offshore in the sense that your capital gains tax is determined by the dollar profits on your offshore investing as opposed to your rand profits in South Africa. It's a bit technical, but there's a tax saving to invest in dollars and make money in dollars. And then you get the benefit of the rand exchange rate for free. You don't pay capital gains on the rand exchange rate. And that's a strategy that we've used at Brenthurst and advocated for a very long time. Secondly, but the balance is taxed. Your capital gains is taxed. Your interest is taxed, which is zero. So that's nice. And more importantly, your dividends are tax-free mostly overseas, because overseas they have structures that we call roll-up funds. There are no dividends declared. They just put back into the fund. So your dividends are effectively tax-free offshore. And more importantly, your offshore investments do not attract VAT. You don't have VAT on your advisory fees, your platform fees, your management fees, which over time makes a big difference. And that's not commonly known. That in fact, rand for rand or dollar for dollar, it's actually cheaper to invest offshore. Even if the returns are exactly the same, you're ahead by about a percentage point per year because of all these little tax savings offshore.
So let's talk about which countries or where we should take our money. As we said, South Africa is now being considered a risky company, but everybody is counting China, China, China. It is the second biggest economy in the world. It is the second biggest stock market in the world. Forecasts are that it will be the biggest economy within the next 5 years. They are relaxing their capital controls. They're cleaning up their regulatory framework. Is China the place to be? We've mentioned all the technology funds in the US. We've talked about property investments in Europe. Are we underweight in the East? And should we pay more attention to our biggest trading partner?
I think we should be. Investing in China is still a relatively new thing. The stock exchange is not as developed and sophisticated as the rest of the world. And China only recently has been included into the various global benchmarks, the MSCI benchmarks and Morningstar, etc. So it's a bit of a new frontier in many respects, but has been quite, people invested in there have done extremely well. And there are one or two South African fund managers have gone into China and have made great returns in China. But I would not put all my money in China, even though I think it possibly can be a great investment. I would perhaps allocate maybe 10% into China. I think while the tech run continues, the internet bubble, etc., the cloud computing, and this working from home, the mobility type of industries, it'll still be the United States for the time being that will attract my attention, especially in the biotechnological field, the medical field, the healthcare field. But yes, you would have some money in China. You'll have a bit of money, believe it or not, in places like Russia and maybe in Brazil. But that's all part of where your asset allocation comes in. I will still stick to the mainstream markets, but with a little bit of a tactical exposure to a place like China.
In times of crisis, people tend to go into safe haven assets or more conservative investments like government bonds. Let's talk about South African government bonds. It seems that it's the only yield or attractive yield in the local market going around. Ralph, what is your view about investing in, and I'm talking about sovereign bonds, not municipal or bonds of state-owned entities. We are at the fiscal cliff. We have been downgraded to junk status. Should we actually dare put our money in a government that's not really performing or producing the goods?
I think that, you see, the challenge with South Africa, it's a crisis of legitimacy. I mean, if you look at the instruments, I always hear my colleagues saying that our bond actually, they perform much better than their European counterparts. That actually, if you were to put money in some of the bonds, example is often given with Germany, that you gotta have to pay for them to hold your money for you. You ain't getting much when it comes to the returns. But here in South Africa, we know that bonds are, of course, guaranteed. And the question is, can South Africa actually even get to a point where it default? And how will that be? I really don't know. I don't think we'll get to that. I don't really think that we can get to the point where we default. But I do not speak with confidence here, because what I often ask myself is, you look at the public expenditure, you look at the current debate around reforms through Treasury, and you look at the lack of consensus around that. Are we going to be able to manage the debt trajectory? The rating agencies, more often when you speak to them, they look at the politics, whether these politics will actually function in a way that South Africa will be able to turn things around and manage the use of public resources better. I mean, look at how the whole discussion around South African Airways went about. South African Airways exists in another form. Some believe that it should have been liquidated. Some believe the state should have cut its own losses. All of these are showing that there is still unsettled policy contest. So, but I wouldn't say the state is going to collapse in South Africa. What I'll be concerned about it is to say, and I've written this openly, is that we are just accumulating too many characters of uncertainty that at some point we are going to forget what certainty is about. And a lot has to do with our politics, unfortunately.
Magnus, where do bonds fit into a diversified portfolio? And looking at the yields of offshore bonds that are almost zero or even negative, is there space, or would you recommend bonds as offshore bonds in a South African's investment portfolio? And in which way would you recommend people invest in them? Your mic is off, Magnus.
My apologies. Your global bonds, especially the U.S. Treasury and the irony is that a third of all global bonds are trading at below zero. So you're not getting any return on those bonds, but you do have certainty that you'll get your money back. And there's a lot of money in those bonds. $15 trillion are sitting in those bonds where you pay them to keep your money. That's the element of distrust on the global markets. That's also why the gold price is rising, because gold price and the cost of US money is inversely related. Between the two, I would rather buy gold, which looks a bit prettier. But South African bonds, interestingly, have been quite attractive. They offer a very high yield, but it comes with risks that we default on our global debt 4 or 5 years down the line, which has a currency risk. So you might be getting 8% in rands, but the rand is 16 to 1 one day and then 20 the next day. You've lost a bit of your money if you're a foreign investor. The point I'd like to make about offshore, and a lot of people ask me, are we going the route of Zimbabwe? And I'm saying no. I agree with Ralph. We're not collapsing. The country that we should compare ourselves to is Argentina. Argentina has a very long history of defaults and not paying its debt and policy stuff-ups every now and then. Almost identical to us. Argentina, believe it or not, around the 1930s, was one of the top economies in the world. It was reckoned to be the next America. And it is just bad politics, and they've even made movies and plays about Evita, etc., which glorified the political disaster that Argentina was. And Argentina today pays the price in a currency that has just collapsed. It was 3 to the dollar 10 years ago. It's now 60 to the dollars. And it's just become a very, very poor country. So we should compare ourselves to Argentina. Even the governor of the Reserve Bank referred to Argentina. If you start going down that route, you pay the price in the currency. And that brings me back to my recommendation that all South Africans who have the means to build up some dollar assets or some pound assets in their portfolio. It just makes so much sense to think like that in case you have a currency collapse.
Magnus, Ashraf Esop asked, would you recommend buying residency by investing in properties in countries like Malta or Portugal? What is your view on that?
That's one way of getting a second passport. If you're worried that your South African passport is going to become an issue and you want to, especially a EU passport, you can do that by buying your residency, Portugal and Malta, but that's a very, very expensive way to do it. And it's not likely to turn out to be a very good investment. So you're paying a massive price to get an EU passport, which is not always certain. So you better read the fine print very, very carefully. But a lot of South Africans are considering it. A lot of people have immigrated to New Zealand and Australia. That's become very expensive. You can take $900,000 to the United States and go and start a business and employ 5 people. You will get your green card. And other people get passports via the ancestral route, either the UK or Germany and so on. But you've got to have a lot of money to buy a second property just to get an EU passport. There might be smarter ways of doing that.
Ralph, we're talking about property investment, maybe a little bit around land reform. Do you think rules in South Africa is really anti-property ownership? You're just looking at transfer duties. We're looking at interest on mortgages not being tax deductible. We're talking about how difficult it is for the layman to actually qualify for property financing. How do you think government needs to make that kind of regime a bit more friendly for people to actually want to invest in property and in South African property, for that fact?
I'll bring you what I think is a very controversial part of this debate. Quite often when I do research, I go out in rural areas, I go out in all these areas. I see mansions that are built by people, but they've got no title deeds. So it's almost like a lot of money that is just being counted in the economy because they are sitting on assets. And I think it speaks to how do you actually reform the property ownership regime in South Africa. I mean, you've got a lot of people who are under traditional leadership council who have developed property which they cannot exchange in a market. Literally, you can't because there are no title deed. You just occupy, irrespective of how valuable that is. But it will surprise many people because it's not part of the mainstream debate, Magnus. I mean, you don't get to hear much about people complaining about how in our economy, how in measuring our economy, there is the larger part of economic activity that involves our people that we are just not accounting for. I mean, the amount of property in rural areas where the banks are not involved, we are not measuring that. It's massive in terms of money, but it's not part of the exchange economy. You cannot exchange in that area, and it's locked out. Why is it that is the case? It's because of patterns of land ownership there. And while we are dealing with issues of land reform, which we have framed as well to deal with our historical problems, no worries, we can do that, we can indulge. But when you start to think about how to proactively think about land, a piece of land, you have to start, if you're genuine, you got to start also with those people in rural areas who are holding land under traditional leadership, that they've got no control on the assets that they've invested so much money on. For me, that should be part of the broader land reform in South Africa. So from that point of view, I'll say that yes, we have inherited the system that is just not in favor of using property as a favorable medium of exchange in the economy. And we need to reform it further. And I'm pointing further to say that those who think that the problem is just with the current land reform, I'm taking them back to say that you have got massive assets locked in rural economy there in the form of building. Nobody knows how much is it. That's how it is in my mind.
That's a very good perspective, Ralph. If those people can get title deeds, they can get ownership, they can get loans from the bank, improve their properties. That is how the traditional white middle class slowly over time built their wealth. And 20 years later, they could send their kids to school. And I think there's a glaring gap in the government's thinking about land ownership. They're focusing on the wrong area. As you point out, there are millions of people who put money down, but they don't own the land. So it doesn't become tradable. It's a very good point.
Magnus Nick Cowley asked whether you can take out of the country your lump sum of a living annuity if you're already receiving monthly payments.
You can, and I see there's another question about living annuities. The Theod asks, can you invest in a living annuity offshore? Yes, you can go 100%, but the money stays in South Africa. And the second part of your question is you can take up to 17.5% of the capital, draw it out of your living annuity annually and pay your taxes, and then you can remit that offshore. But you can do it quite easily in your living annuity, and a lot of people are not aware of this because, once again, the big institutions, and I'm not going to name names, have been playing games and saying, no, there's regulation 28, you can only take 30%, 40%, but you can take 100% offshore. You can go for very new, attractive technological funds. See, somebody's asked about the Signia funds, Fourth Industrial Revolution funds, healthcare funds. Those are the funds that are going to give you the returns. But remember, these are low-cost funds. You'll never get these big institutions coming out promoting low-cost funds. It means a loss of business to them. So you've got to speak to an advisor or do it yourself. go and do research on the market. There are fantastic low-cost funds in South Africa and abroad, and you can get substantially better returns. I am horrified when people send me their statements from these big companies, no names, but the one color is green, the other one is blue, and the other one is red. But I look at their returns, and I look at the cost structures of their pension funds and retirement annuities, 4%, 5%. And the investor is getting 2%, and the investment company is getting 5%. Why would you put your money into this? You'll get arrested in other countries if you try and sell products like that. But anyway, let me not say too much. But there's a lot you can do by understanding how your products work. And you need to get more offshore exposure. We're doing this every day. We're converting existing portfolios without cost and moving the money offshore within the portfolio.
You see, Magnus, I can see, Magnus, you are picking fights there. You see, I grew up in Limpopo, so in my mother tongue, Sepedi, something has to be simple. If I don't understand something, I won't put money in it. So I understand where you come from about a very complex fee structure that you're talking about there. You'll be in trouble, but I think you're pointing out to something very much important. Sometimes people just throw money in things that they can't understand. I often say to people that if you don't understand it today, there is no way that you will understand it when it brings large returns. Most likely you are not getting much because you just didn't understand it from day one. So it's about the basics of just people negotiating some of these fees and just saying that, no, let's be transparent. You cannot charge me this, and out of this, I'm the one who's taking more risk. And so it's about transparency for me, and it is the basics. And that's why I'm saying, if it doesn't make sense to me today, I don't think I'm going to go to bed thinking that I'm going to wake up with it making sense better. I won't sign up to it.
Ralph, that you're hitting the nail on the head for a very important point of people who don't understand their investments, who don't trust the system, who thinks it's too expensive. We're talking about financial inclusion. We're talking about democratizing the investment market. Before people can even consider going offshore, they must just even enter the market in the first place. Where do you think our financial industry and regulators are failing the majority of the people to even get an entry point or a foot in the door to start saving for their future?
Again, let me give you a quick example here. It's my competitive, my advantage of being raised in rural areas. I mean, where I grew up, people have got a lot of money they've saved in burial society with the banks, and they're not saving in instruments that could perform better. Actually, if someone started looking at that money, it could actually do a way more for those people than just burying their loved ones. So whenever I hear people saying that South Africans cannot save, and I'm from rural areas, I've seen people saving, I've seen people pulling together money, after months they pull together, the stock fails, you name them. The reality is that our financial sector has not penetrated that area. And again, it's a lost opportunity here. It's a lot of value lying in there where we are losing on that value. It cannot be that people meet, 50 of them, they put the money for a burial society, and that money just lives as it is. It goes and it stays in the bank. They go withdraw it when there is tragedy. A loss of value is lost. I actually say that those people, their lives could be changed while their money initially invested in that. There's a lot of money in those areas. Anyone who says they cannot save, my view is that we have not adapted our financial instrument for simplicity. Honesty, mostly is honesty, transparency, and simplicity, and be able to sell people the product that they fully understand, extracting that value from the saving that I've seen there and building portfolio out of that, making sure that the funds that are actually managing that money also reinvest in some of the portfolios in the community. I think it can work better, but I think maybe I'm oversimplifying it. But for me, I just see a whole lot of value that is not being tapped to the maximum in that area. And it talks to coming up with the system that understands your people. Don't wait for your people to be educated to understand your system. Adjust some of your system to start with your people, whatever level they are in society when it comes to saving. Provide something for them.
Magnus, that's got a good point where a lot of the younger folk, the millennials, say that this local financial system is not catering to their needs or offering products that they are interested in, where offshore options like the biotech funds and all those tech funds do speak to them. How do we bring those two worlds together and bring those kind of products to these younger people in South Africa?
You're quite right. The millennials are investing totally different to the previous generations. If you look at the success story of companies like Signia, Easy Equities, maybe Corvest, and then offshore, the Vanguards and the BlackRocks, the youngsters are investing in index funds, tracking funds, and they educate themselves tremendously, and they are choosing those type of products which are simpler and much cheaper than the old traditional investment products that generally have been on the South African market. I've been in this industry for 35 years, and I still come across investment products from the old insurance companies that are so complex, so difficult to understand, so full of caveats and disclaimers that nobody understands it, and you either trust the system or you walk away. As Ralph says, we've got to make it much simpler because there's a lot of untapped money lying in stockfels and so on. But even in the around the world, there's been a move towards simplification, lower costs, but greater choice. And I think we're being left behind to a great extent.
Magnus, we're getting quite a lot of questions referring to management fees, performance fees, the cost of investment. South Africa has been renowned for having quite an opaque investment management fee structure, which is getting better, but is still very difficult to understand. What is your point of view on that, and how do we change that and make things, as Ralph mentioned, more transparent so that people actually know what they are paying for and where they're paying for it?
Well, I think the situation today is infinitely better than 10 or 20 years ago, where all the costs were hidden. All the costs were hidden. You had no idea what you're paying. Today, your costs are very transparent. By law, the FSCA, very strong on that. You know exactly what your fees are, where you pay them, and when you pay them. If you don't understand it or you don't know, you haven't asked that question. And most honorable investment companies will today give you a full statement saying, this is where you pay your fees. You either pay it up front or ongoing, or you pay it on the platform, but it's very difficult to hide fees. In fact, it's illegal to hide fees. And it's up to the investor to ask, what am I paying, and am I getting value for my money? It's a very simple commercial transaction. I'm paying you to do something. Is it worth my while to continue doing something? But there's a great number of people who are very lethargic. They don't look at their statements. They haven't heard from their advisor for a year, and they keep on paying. And that is actually your fault, not the system's fault.
Magnus, how do these costs compare locally to that of offshore investment? Is it more expensive? Are they structured differently? Are they regulated in a different way? How do our fee structures compare with offshore investments?
Look, our fees are not regulated. They are guidelines, but the fee structures are open to negotiation between the asset managers, the list platforms, and the advisor. And there's no regulation. There are guidelines, but they're not regulated. In fact, our fees in many respects, and in certain respects, can be cheaper than the rest of the world. I spoke to a client yesterday in the United States. Their upfront fees is 5% to put money into a traditional fund. We don't have those kind of fee structures. By and large, to answer your question, our fees are virtually on par, maybe slightly more expensive than the rest of the world, mainly because the rest of the world has been onto the index funds via the Vanguards and the iShares from BlackRock much earlier, and their fees are lower. They're definitely lower than the traditional asset management fees in South Africa.
Ralph, as a final point, because we got only a few minutes to go, As a former policymaker, where do you think government needs to change their attitude, have a radical shift, make a difference to make it easier for people to participate in the economy, to access the financial markets, and as you said, own assets that they can trade or create wealth from? Where are the lowest hanging fruits? Where should we start?
I think that we should tap the rural economy. We are not doing much about it. It is just a burden where we just transfer social security, but we are not getting much out of it because we are letting it go. And I studied rural economy throughout. I've traveled across the continent, seeing what people are doing out there. I think that we need to sit down and come up with a better spatial economic development approach where in those areas, rural areas, we start improving property, the ownership of property. I mean, it cannot be that we have not really attended to ownership of property for the majority of the people who are in those areas. I mean, can you imagine? I grew up there where no one have got title deed. Even today, I even had to graduate and come and talk about it today. It's not even a matter. I mean, we need to understand that when England developed, capitalism, when it developed, the first thing, one of the things they had to do to clarify very well was property relations. If you cannot define property relations, if you cannot define your contractual laws very clear, you need to define property relation even in those rural areas. Attend to it. If you can define property, because property is capital, it allows you, gives you leverage to borrow. It allows participation, actually. So if you do not define that for majority of the people, there's no point.
With 3 minutes to go, we didn't even address half of the questions that have been asked. Hopefully, this will be the first of many discussions around investments and also investments. Thank you very much, Magnus and Ralph, for a fascinating discussion. I want to thank you, Brenthurst Wealth Management, for sponsoring this webinar today. They were appointed the best boutique wealth manager last night by TEDx for 2020. Congratulations.
Thank you.
And all of these questions hopefully will be addressed in the write-up that will appear with the webinar on our webpage later on. And hopefully we'll get Magnus to look at some of these questions and get back to some of our viewers. Thank you very much, gentlemen. Thank you very much to our viewers. I thank you, my production team, and thank you for Sasha for being in the sidelines for my backup. And with 2 minutes to go, is there anything else you guys want to say?
Thanks to everyone, particularly those the audience that stayed with us. We are grateful.
No, absolutely. And Ralph, once again, congratulations on your doctorate. Last time we spoke, you were Mr. Well
Thank you.
done. And just a message to investors, get more involved with your investments. Ask the right questions. And if you're not getting service from your investment company, fire them. Very simple, fire them. It's a commercial transaction. And if you're not happy and you're not getting service, there are lots of very good guys out there in the marketplace who will give you the kind of service that you need.
Thank you, Magnus.
Thank you very much. I'm Ruan, and this was the Daily Maverick webinar. Thank you very much. Goodbye.